There had to be a relief rally after the election. And I don't think it was financially related. I think it was more, oh, great, we're not going to have World War III after all. That kind of relief rally, because Trump and his guys are at least giving lip service to ending the Ukraine war, which is where humanity is really at stake. You know, we're fighting a proxy war against the world's other major nuclear power. And that means any kind of miscalculation is an existential threat. So take that away, and it's no surprise that a lot of people bought stocks because they were feeling more optimistic. But then, you know, relief rallies never last very long because you always have to come back to reality. And where we are now financially, in terms of equities valuations, you know, if we're going to stay with the stock market, equities are wildly overvalued by any measure that you want to use. And insiders, corporate insiders, are selling at record pace right now. You know, they who see what's happening within their own companies are dumping their shares at a rate that's almost never been seen before. That's a very big signal. And there are other related signals. You know, Warren Buffett is raising cash pretty aggressively. He's got more cash on hand than he's ever had before. And he's been selling stocks in order to raise that cash, of course. And there are lots of other things out there that point towards an end to this stock bubble. And I think the biggest one is that the Fed is now talking tough. They did cut interest rates just lately, but it was along with a lot of hawkish rhetoric in the sense that they're talking about maybe not so many increases in the year ahead as before. And that makes a lot of sense considering that retail sales just came in stronger than expected, and inflation by most measures is above the Fed's target, and some of those measures are trending up and not down right now. Interest rates jumped in the last couple of weeks, and the 10-year Treasury yield in the U.S. is now back to 4.5%, up from like 3.6% during the relief rally. And then equities, of course, are wildly overvalued. Home prices are at record highs. Bitcoin just broke 100,000. And, you know, you add all that up, and this is the kind of environment where a central bank would normally be tightening aggressively. And the fact that our central bank just cut and then promised cuts in the future, just not as many, means that our central bank in particular is going to have a ways to go before they confront reality and actually have to start tightening. If interest rates stay this high while they're confronting that reality, that makes stocks unattractive. The yield on the S&P 500 is about 1.8% right now. And with today's interest rates, you can get a bank CD that'll pay you 4.5%, maybe more in some cases. So if you're a nervous investor, what are you going to do? You know, obviously, a lot of people are going to take the bird in hand that is 3 times as high as the bird in the tree, and they'll sell stocks and put that money into medium to short-term fixed income. And that's how a lot of bear markets get started, you know? Where valuation just gets to the point where the yield on stocks isn't attractive anymore, and people make the logical shift. And, you know, leaving everything else out, all the crises that could happen out there and all the ambiguity in the world, stocks are due for a big correction just because of the imbalance between stock yields and short-term interest rates. Retail investors are still buying stocks, and hedge funds are way long right now. Those are 2 groups of people that qualify as dumb money at major turning points. So yeah, you got the wrong people piling into stocks and the right people getting out of stocks if you assume equities are overvalued and they're going to go down. So yeah, that's a setup for a correction at a minimum and maybe a serious bear market. And given where valuations are right now, history says that a serious bear market is the thing that comes. See, then at that point, with the next bear market that causes the next recession, things get really interesting because it's completely possible that we've taken on so much debt in the last 40 years, and especially in the last 5 or 8 years, depending on where you want to start this debt binge that we've been on. We're incredibly financially fragile. And it's completely possible that fractional reserve banking, fiat currency regime that we instituted in 1971 is going to be called into disrepute. In other words, the experiment might end with the next big recession, equities bear market, and then resulting government bailouts. Because if this government in the U.S. that's already wildly over-indebted has to throw another $10 trillion at the banking system to bail it out, which it easily might in the next bear market, then it's completely possible that people look at those numbers and say, okay, you know, debt is rising parabolically, interest rate or interest costs for the U.S. government are going straight up, and now they're going to just create out of thin air $10 more trillion to bail the banks out. Do we want to be in this currency? And so I think that's where the story gets really interesting. We clearly may have a garden variety bear market coming just because of valuations and those other things we just talked about. But if that metastasizes into another great recession, another 2008, 2009, where lots of big entities are going to go bankrupt unless the governments of the world step in, it's possible that that's our last shot at that particular brass ring. We just can't keep going back to that well and keep doing that over and over again. And maybe people give up on this system. I mean, that's the thing we've been talking about for such a long time, the crack-up boom leading to the monetary reset. I think there's a decent chance that we're staring at that over the next few years. And if so, well, it's financial history we get to live through, and terrifying for most people and potentially really lucrative for the people who are positioned for it. The entrenched aristocracy or the deep state or the oligarchy or the uniparty, whatever you want to call the guys who have been in charge for the last 40 years and want to stay in charge, they're clearly willing to do basically anything. I mean, the guys who are in charge now are in the same lineage as the ones who assassinated JFK, okay? So you can go all the way back to them and find people in charge who are willing to do basically anything. So yes, ramping up a potential nuclear war with Russia, crazy as that sounds, is something they're actually doing now. They think of it as a negotiating tactic. You aggressively escalate the fighting in order to give yourself the best position for cutting a deal. But we're aggressively escalating the fighting with right on the border and inland with the world's other nuclear superpower. Is that worth another move on the chessboard? See, these guys are playing games. They don't actually seem to understand that they and their children are going to be incinerated in a nuclear war if they get this wrong. And, in the financial sphere, it's basically the same thing. We're running massive deficits now. The first 2 months of the U.S. fiscal year was by far the highest deficit for that period of time that the U.S. government has ever run. And remember, we're 15 years into an expansion. We've got equities at all-time highs, which means, we're generating lots of capital gains that the government can tax. Unemployment is near a record low. We've got more people working right now than ever before, which means lots of payroll taxes are flowing into the government. And yet we're running the biggest deficit of all time. We're on track for $3 to $4 trillion deficit if you just extrapolate the first 2 months of fiscal 2025 out. That is also basically a scam designed to make things harder for the incoming administration. So yeah, these guys are not going to give up easily. Was it the bird flu that they just declared an state of emergency over in California? Yeah, well, it's pandemic version 2.0 coming. And that's completely within the range of possibility too. If California does it, it's a big chunk of the US right there. So it can't happen too soon for Kennedy to come in and clear out the people who are potentially running dirty tricks in the guise of national health care. But, there's no guarantee that any of this is allowed to happen because there are all kinds of potential false flags that can happen between now and Inauguration Day. One of them could be some kind of terrorist attack. Another one could be some kind of geopolitical thing where some war somewhere ramps up dramatically. And there could be financial crises. There could be a gigantic derivatives bust or something like that, engineered by people who don't want Trump to be able to cut the size of the government. So a lot of stuff could happen. And I'm not predicting any one of them, but we're already seeing stuff like that. I mean, ramping up the Ukraine war on the way out the door doesn't make any sense for a president, or declaring a state of emergency in America's biggest state over something that has infected, 27 people or some crazy low number like that, like something that is beneath the notice of a governor in a state normally, but they're back at it again, Let's just say it. They loved having the power that was conferred on them by the pandemic, and they miss it. So they want to get back to something like that. The monetary crisis that leads to the currency reset, they're baked in the cake. We've taken on more debt than any country can possibly handle. And that's got to play out. That's got to have the inevitable consequences. I think a lot of good can come from this change in leadership and the new people that are coming in. But that doesn't mean that we fix the finances easily or at all. I can't imagine how any country can fix debt at 120% of GDP with interest costs going straight up and all the other things, all the other overvalued assets that are out there right now. You got to have a financial crisis just because of overvaluation in the housing market and in equities. And that is going to make government deficits go up from here, which we can't afford to have them do that. And then you got the structural deficit of baby boomers retiring. My generation is heading off into the sunset now and collecting Social Security and Medicare, which means government spending has to go up. There's no way to actually cut government spending. I mean, even limiting it to an unacceptable growth rate is probably impossible just because of demographics. So all of that stuff, equities thing leading to a bond thing, leading to inflation and bailouts and a currency reset, that's all out there. It has to happen. An analogy is Hitler and Napoleon, who came to power after big financial crises in their countries, and FDR, who came into power during a financial crisis in the US in the Great Depression. Now, he did a lot of things that especially gold bugs don't like, but he managed his way through the Depression and World War II. And then, we went back to being a democracy where you have elections every couple of years and new people come in. He stayed in power for longer than you would normally expect a president to do. But other than that, he got us through this thing and we came out as the America that we recognize. So hopefully Trump and his people adopt the FDR model instead of the Hitler or Napoleon model where, everything just falls apart and we're desperate for a strong leader and somebody ends up being a de facto dictator in order to fix things that seem unfixable. This is a scary time for the US because there are a lot of historical analogies that are terrifying for what's coming. We got to hope that the people we have in charge are wise enough to get us through this so we can go back to some variation of normal 5 or 10 years from now.